when you're looking at it, understand that historically, and I don't have the chart in front of me, but it's something like every 3 years, Bitcoin's dropped by like 40% in one shot.
Yep.
And so what you have to understand is that if you want to be a trader, like you do some trading, the nice thing about the crypto market is it is volatile. And that's where traders make money, is in volatile markets. So if you want to be a trader, it actually sets you up quite well because it's volatile. The other side of it is you're just a long-term investor like I am with the majority of my things, where I say, okay, I'm going to put this in here for the next 10 years. And I'm going to, I suspect that it's going to end up being at this, level in 10 years when I want to pull it out and retire, or whatever the case may be. Right. So
exactly.
When you actually look, you have a chart here in front of you, Andrew.
I'm going to pull it up. Can you see it? Am I showing right now? Or you see it, but I don't know if the viewers see it. Hold on.
I don't think the viewers see it.
All right. So here we go. Here's the big daddy. Let me move myself out of the way here. Hold on.
Sure. And what is the time range that you have on this chart right now?
1 sec. There we go. Okay. This here is, first of all, this is where Bitcoin is right now, 99,000. I want to go down to the bottom piece right here. I think this is important. Here it is right here at the time of this recording, right? So December 5th, which was yesterday, Bitcoin hit a record high of 104,630. So that triggered this episode here, right? Is that we wanted to talk about the fact that it crossed 100,000. This is a chart. Let me go to full chart here. That's a daily chart. Let's look at the last. There we go. Right. So we can go back. Let's go all time. Here we go. All time. There you go. So there is this is when it was just bouncing around. I remember buying a little bit in 2012, and I took a course and I was like, yeah, whatever. This is nothing. I've always had a little bit since like 2014, 15, not much. But really, again, didn't start taking it seriously until the big, again, follow the money. Wall Street started forming ETFs. That's been talked about since 2022. It was implemented in 2023, and they were launched in 2024. So that's where you got, and if we go right here, right, if you look at the downtime, right, all in here, there was a huge move here in 2022, huge decline back. I mean, this was lights out right here, Aaron. Can you see this?
That was a monster.
It was like this thing is totally dead. It's done. Never to be returned again. 14,004 after topping out at 68,000 in 2022. This is, COVID
that's
money.
When the government really started being vocal about wanting to shut it down.
Oh, yeah. This was all, again, this comes back to the current administration that lives for regulation. Everything they can regulate, they will if they get away with it. And this was all that talk in here. And then eventually, this move right here is when the talk of Wall Street started happening. Here it is. It's pretty much an uptrend from 2022 all the way to early 2024, right into the adoption of ETFs and Wall Street saying, we are now in this game. We've now formed the vehicles and the instruments to play this game. And now all of a sudden it's bounced around. This is right here, Aaron, this year. This is all who's going to win the election.
Yep.
Sideways. Trump victory, pro crypto, gone. 60,000 to 104,000. Gone like the wind. That's what that was.
And I think you'll see. I think you'll see a pullback because that's a big run. But if you look at the chart, if you look at from 2000 to 18, if you look at 2018 where it really started to take off and people started to say this is something, right? Yep. It was about $10,000 per Bitcoin in 2018.
There you go. Yeah, 12, 13, 14. Yep.
And people and it was a big rise, and everyone was like, "Oh my God, it's going somewhere! It's going somewhere!" And then you got big dump. Down by half.
Of course.
And then you came back up, and then another big dump, and then it really took off, and then another big. This is
sideways for years here, Aaron. Sideways for years.
But if you take a step back from it from a long-term perspective, 2018 to effectively 2025 is 7 years.
Yep.
And in that 7 years, it's gone from 10,000 to 100,000. So it's 1,000% return.
That's right.
Over 7 years. So if you just parked it in there and went and hung out and didn't get involved in all of the chaos and the news and the pundits and whatever, you made 1,000% return, right?
Exactly.
Which is the assets that we typically look at and play the long game with.
Well, listen, Aaron, it's a 10x return from 10,000 to 100,000, right? Yep. And at the end of the day, that is probably outperforming every single asset that's out there right now. If I had to guess, is there a 10x in 10 years? Was it 10 years? You said 2018, so not even 10 years. 8 years?
7 years, right?
Is there a 10x return on anything? The S&P 500 hasn't done 10x in 8 years.
No. I'm actually looking at I'm going to look at the DJI.
You know what I want to look at also? I want to look at gold. What has gold done in that same time frame? Because the comparison now, not that much. I've always owned gold. I like owning gold. I buy gold, right? I think it's a great asset to have. But I don't think it hasn't seen 10x. Although gold was at $200-300 an ounce. I don't know what year. It's now almost $3,000 an ounce. So, you know, your gold has had a pretty substantial move as well, 10x, but over a longer period of time. I don't know if I can throw gold into this chart that I'm looking at right here, but you know, you get the point here, right? This is here to stay. I would love to see, Aaron, this thing tank down to about 80,000.
Yep,
because I would just like to buy more cheaper. I think people will go, oh, look, I told you it went from 104,000 to 80,000. It's done. But that's what they said when it went from 14,000 to 10. And then when it went from 25,000 to 14. And then when it went from 50,000 to 30. And then when it went from 60,000 to 40. And here we are at 104,000. So,
and I'm gonna give people two good books right now. One of them is called The Psychology of Money by Morgan Housel. And the other one's called The Bitcoin Standard. So if you don't actually understand Bitcoin yet, I would recommend you read the Bitcoin Standard because it explains all of the technical aspects of it. And Morgan Housel with The Psychology of Money is a really good book to read because there's some really interesting psychological elements that they study with people when it comes to investing. And one of the ones that I really like, and this will happen in the next couple of weeks, so remember this, is that he says only in investing do people refuse to get excited when something goes on sale.
It's amazing, right?
So it's the only thing in the world that is completely illogical in every single way it's approached. If you go to a restaurant and something is on sale, you're excited. If you go to the grocery store and it's on sale, it's excited. You go to a restaurant, you're excited. You're thinking, I'm getting more value for my money today. But if all of a sudden, for example, Bitcoin drops a week from now to 80,000, which it could very well do. It's done that many, many times. Your natural response is, oh, this wasn't real. I didn't know what I was doing. The government's probably going to shut it down. I'm going to pull out all my money instead of buying it up when it's on sale. It's just on sale.
The only person I know who lives by that is Warren Buffett, which is why he's one of the richest men in the world.
Absolutely.
He loves it. I think he said when there's blood in the streets, that's when I buy.